Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research, and welcome to our top stock picks of the week. This week I'm joined by my colleague Ben Rains. We've got two exciting picks for you, so let's jump right into the action. My top pick is a fabless semiconductor supplier that develops high-precision mixed-signal processing solutions. The company focuses on expanding markets where it can apply its processing knowledge to address challenging issues across the analog to digital divide. The company I'm referring to is Cirrus Logic, ticker symbol CRUS. So Cirrus remains devoted to pursuing its three-pronged growth strategy. First, protecting its leadership in smartphone audio. Second, enhancing the amount of high-performance mixed signal content in smartphones. And third, exploiting its capabilities in audio and HPMS to penetrate new markets. The company has been gaining momentum from increased smartphone demand and product diversification, with notable expansion into PCs, AI-enabled interfaces, and automotive markets. The PC market is relatively large and stable, and successful penetration there could meaningfully diversify revenue in the coming years. Last year, Cirrus benefited from the launch of a next-generation boosted amplifier, enabling higher audio performance for mobile devices. It also continues to gain momentum in the laptop market with design wins on major platforms. And adding to the bullish case, tech heavyweight Apple is working with Cirrus to establish new semiconductor process technologies. Apple boasted that this collaboration will enable Cirrus to develop mixed signal solutions for the company's applications, including Face ID systems. So this is a stock that is not only highly ranked by our Zacks rank system, but it's also outperforming the general market. Only stocks that are in extremely powerful uptrends are able to make this type of price move, and these are the leaders that we want to focus on. So that's a bit about Cirrus Logic's background and services. Let's shift gears a bit and take a look at some fundamentals for this company. Cirrus is part of the Zacks Electronics Semiconductors industry group, which currently ranks in the top 40% out of approximately 250 Zacks ranked industries. And because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months, just as it has so far this year. Historical research studies suggest that approximately half of a stock's price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by focusing on leading stocks within the top 50% of all Zacks ranked industries, we can dramatically improve our stock picking success. And stocks in this group are expected to deliver above average earnings growth, as we can see here, signifying a powerful foundation that should lead to higher prices in the future. Moving to our snapshot page here, we can see that Cirrus Logic is a Zacks ranked number 1 strong buy. And what stands out is the company's consistent ability to deliver positive earnings surprises. They haven't missed the EPS mark since 2021, and they've delivered a trailing 4-quarter average surprise of nearly 32%, reflecting strong execution. This track record aligns perfectly with the power of the Zacks rank system, which prioritizes stocks showing upward earnings estimate revisions. Back in February, Cirrus posted a double beat report relative to our consensus expectations, with sales improving nearly 5% from the year-ago period to $580 million, alongside a sizable 18.3% growth rate in adjusted EPS to $2.97. That $2.97 came in 22.7% above our estimates. And the company, as we mentioned, has been the beneficiary of improving earnings estimate revisions. Looking into fiscal 2026, analysts have raised their EPS estimates by 5.84% in the past 60 days. The Zacks consensus estimate now stands at $9.06 per share. And let's see how that figure sizes up year over year growth. So that $9.06 reflects over 20% growth relative to the prior year. So these are exactly the types of trends that we want to focus on when narrowing down our list of potential stocks. And we can see here that Cirrus has been in a sustained uptrend since last April. Look at how the stock performed well even during the pullback this year. So when most stocks were falling in the beginning of this year, particularly tech stocks, this stock really bucked the trend and has been making a series of higher highs, leading to a period of prolonged outperformance. Between the strong fundamentals and appealing technicals, it's clear that this stock is a leader in the current market environment. So Cirrus Logic, ticker symbol CRUS, is my top pick of the week. Shares have really come on strong as earnings growth accelerates. I see more upside ahead for this stock. Next up, Ben will share with you his other top pick of the week.
Thanks, Brian. Hello, everybody. Ben Rains here for my top stock pick of the week at Zacks. Today, I'm looking at Arista Networks, which trades on the ticker ANET. Arista has been a key behind-the-scenes player in cutting-edge technology for a long time. Its networking infrastructure expanded rapidly over the past decade alongside cloud computing, big data, and most recently and most critically, AI. The company helps build and maintain the quote plumbing that keeps large scale technology operations such as AI running smoothly 24/7. Arista is steadily expanding its portfolio and its reach in the economy that's completely reliant on ultra fast digital infrastructure running efficiently nonstop. AI hyperscalers such as Meta and Microsoft are two of its largest clients, highlighting that its portfolio is full of best in class offerings. The company's growth outlook is also robust, and its upward earnings revisions landed at Zacks ranked number one strong buy. On top of that, it looks ready to possibly break out of a trading range and return to its all-time highs and beyond. So now let's head over to Zacks.com and ZRS for a deeper dive into Arista. Okay, so now we are in our ZRS system here looking at Arista. As I said, ANET is the ticker. So we can see here its revenue growth has been really stunning recently, especially over the last 5 years. It's just coming off a 2025 that saw it post 29% revenue growth to get all the way up to $9 billion. Its GAAP earnings growth has been really stellar as well in that post-COVID boom, along with its adjusted earnings as well. So all these growth estimates are looking really impressive for Arista, and it's worth taking a look at its balance sheet here as well. We can see that its shareholders' equity is heading straight up. It's got a really impressive balance sheet. No long-term debt here, no current debt. So really, really stellar balance sheet for Arista, which is always a great sign for investors. And now we'll take a look at its performance before we go ahead and take a look at some of its growth outlook. So this is over the last 10 years. We can see the stock is up 3,700%, blowing away tech. We'll go over the last several years as well, just to put everything a little bit more context more recently. You can see the stock's up 275% roughly, blowing away tech as well, which is up about 113%. And then as I mentioned up top, we're going to take a look at why it might be ready to break out of the technical range. So it found support. This is that green line is this 50 long-term 50-week moving average. And we'll go over the last year here. And we can see that right now it had a big surge recently, and we're going to draw a line here. We can see that it's trying to get back up to these highs from the fall. So this is the end of October, early November, and this is mid-October. So these are its all-time highs. I think it has just a little bit further to go, and it might be able to break out of that range and into a brand new range and new highs going forward. We'll take a look at its valuation as well while we're here. Go ahead and take a look at it. Forward 12-month earnings for Arista Networks. So we can see Wall Street's been willing to pay up for the stock for a long time. Wage 45 times forward earnings is nothing cheap. It's trading at a big premium to tech, but also it's crushed the tech sector over all those periods we just showed. And it's traded as high as nearly 50 times, or excuse me, nearly 60 times forward earnings in the last decade. So trading well below those levels right now, even though it's possibly ready to break back out to new all-time highs. And we're going to take a look at our Zacks.com ticker page for Arista Networks as well. As I mentioned, the Zacks ranked #1 strong buy. Its internet software industry is in the top 40%, which is always a good sign as well. Go ahead and take a look at its earnings snapshot here. So we can see its earnings revisions have gone straight up recently for the last several years. And then to start 2026 as well for that 2027 estimates and 2026 estimates, up about 5% for 2026, up about 4.5% roughly for 2027. And we'll go ahead and take a look at our detailed estimates page. So on top of its big growth last year, we're calling for another 25% revenue growth this year to get up to about 11.3 billion, and then another 20% growth next year to get all the way up to 13.5 from just 9 billion in 2025. And on the bottom line, we're calling for roughly back-to-back years of nearly 19% adjusted earnings growth. So really steady improvement on both the top and bottom lines, and it's beat by an average of 9% in the trailing 4 quarters. So always a great sign. Then we go ahead and take a look here. So it's still trading. Its average X price target offers 17% upside from its current level. It's gaining more traction from Wall Street. So we now have 27 brokerage recommendations, with 21 coming in as strong buys, 2 buys, 4 holds, and we have no sells right there at all, or strong sells. So that's a great backdrop for why investors should consider looking at Arista Networks right now. Arista stands to be a big winner in the AI age, no matter which hyperscalers grab more market share or how the technology evolves. On top of that, ANET, or Arista Networks, is a well-run company with a stellar balance sheet. And that does it for me in this episode of Top Stock Picks at Zacks. Please head over to zacks.com/promo page for a look into some of our services, portfolios, and more.